Hey, what's up, everybody? So thank you for joining me on CPI. We're going to add the CNBC to the screen right before CPI numbers are released so we all can watch together, and then we'll break it down together. Now, first, let me start off and just tell you what CPI is. CPI is the Consumer Price Index. But how is it measured? How is it gauged? You take a wide range of products and services and you compare them to the cost of those products and services last month. So you can include something like rent. You can include something like, I had to get my car towed. Did the price go up or down? We, of course, know about gasoline because we've all been feeling that pain. But that's exactly what CPI is. It's basically a gauge of inflation. And then people will say, well, I thought the Fed controls inflation. I thought the Fed is raising or lowering hikes or interest rates. Doesn't that involve inflation? And the answer is yes. But there are two ways to look at inflation. You have the interest rate, which is basically what the Fed has capabilities to maneuver higher or lower, and that's the cost to borrow. So when you're an institution, when you're you and me taking out a car loan or a house mortgage, that affects our payments. So as the interest rate goes up, it becomes more expensive for us to do everyday things. So then you have CPI. Oh, I'm going on vacation. I need an airline ticket, a car rental, gas, food, lodging. That affects us CPI wise. Again, Fed controls interest rate. Now, here's the interesting thing about the Fed controlling interest rates, okay? Corporate debt has been skyrocketing. Now, you've heard me talk about personal debt and how people are using their credit cards and living off their credit cards. And more people, and this is a great stat, people making $100,000, 60% of those people are living paycheck to paycheck. People making $150,000, right? A lot of money. There's like 40% of those people are living paycheck to paycheck. Now, people making $200,000 in the clear, not a worry. 20% of those people are living paycheck to paycheck. So understand, if you're struggling in the market and your goal was to improve my financial future, and that hasn't happened, I'm here to give you hope. I'm here to tell you, you don't want to give up. You're just looking at things the wrong way. So there are some rules that I'm going to talk about probably after we discuss CPI. But let's talk about what else is happening in the market real quick. I've got my cheat sheet here. There's a possible railroad strike that's going to come into fruition on Friday. Now, what are railroad workers asking for? A better quality of life. So we can't give them a better quality of life, but we can send a shitload of money overseas. So again, potential railroad strike on Friday. Now, they have the upper hand. Why? Because there's already a slowdown in the economy. Imagine if the railway systems weren't working properly and you couldn't get coal from one area to another area for energy use or something like that. So please pay attention to that. Write it down. You want to Google it, because if the railroad strike does happen on Friday, it will cause the market to go down. What else could cause the market to go down on Friday? Well, shoot, it's quad witching on Friday. So that's pretty crazy. We know what happens generally with quad witching. Now, before CPI numbers are released and you guys get overly excited about the market, let's remember the old fake out, right? Where they take the market up and then they dump it on the retail trader. I have some specific key points in the SPY that are levels of support and resistance. So even though it looks like the SPY will be strong, probably at like 414 this morning pre-market, I'm going to tell you where it might struggle in the range. Some people are going, oh, it's going up to 420. Not a problem. Yeah, there will be a problem because there's a supply zone in there, meaning when the SPY hits a certain zone, there are institutions, hedge funds, banks that are selling massive positions. So it's going to keep there. Now, we can look at yesterday's SPY, right? Yesterday's SPY was struggling, yet Tesla was doing okay. So that was interesting because wouldn't the SPY follow Tesla or Tesla follow the SPY? We know the same thing was true with Apple yesterday. Apple was off the hook 6 points higher, yet the SPY was struggling 410, 411. All right, let's get the CNBC people on with us so we can hear them. Can't hear them yet, Carlos. But we will hear them in a second. So what we're going to do is we're going to let them break down the CPI report, and then we're going to diagnose those numbers, and we'll talk about them specifically. If you have a pen and paper, you want to write some of these numbers down so that when I talk about it, you don't have to join me next month. You can go, okay, I see exactly what's happening. So again, we're looking at it pre right here. What's probably going to happen is when CPI numbers are released, you're going to see the Dow pop to 300, then shoot all the way down to 100, and then probably back up. Again, because they like to fool us.
Tyler,
they like to show manipulation. We see it both ways.
I agree with Austin. I'm really going to be looking at the core measure,
coming in right now.
the headline. We know a lot of the components there dropped last month, so it's probably going to be flat, maybe even slightly negative, but I'm going to be looking at the core.
Sorry, Nancy.
Well, I'll take the over on that.
Here's the number we're looking for, just so everybody's clear, okay? 7.9 would be light on CPI, should drive the market up higher. 8.0, same. Now, if it comes in as estimated, 8.1, then it's up for grabs. Do they want to push the market higher or shoot the market down? 8.2 or 8.3 would be considered high.
All eyes on core. We want to see things outside of just energy come down in this report.
Very good. Okay, and then we'll get to you in a second, Steve. Sorry to leave you out. It's time now for the report. Rick Santelli.
All right, let's watch what the Dow does on the side. See, pop to 318 and then all the way 138.
The August numbers for the Consumer Price Index. Headline number expected to be down is up 1/10 instead of down 1/10.
Not good for the market.
Remember, the high water mark there was in June when it was the highest level since 2005 when it was up 1.3%. Up only 1/10, of course, is the lowest. Well, since last month, we're unchanged. If we strip out the all-important food and energy and do understand, gas was down, 26% month over month. It's food that we have to pay attention to, up 0.6%, double the expectation. And the high water mark there is up 0.9. That was in April, and that went back to 1981, up 0.6. Well, if you look at up 0.7 in June, that's kind of our comp. Now, the year-over-year numbers expecting up 8% as well. 8.3 on year-over-year.
Oh, that's really high. 8.2 would have been up a little.
Of course, 9.1.
Dollars going up, making things more expensive as well.
8.3 equals April, and it is the lowest level since February.
That is far from what everybody expected.
If we strip out the all-important food and energy on a year-over-year perspective, it's also hotter than expected.
That is very,
up 6.3%. We're expecting up 5.9. The high water mark there, up 6.5. That was in March. That was the highest since 82. So when we see 6.3, that actually now is the highest since March of when it was the highest since 82. We've had 4 months in a row where it was moderating a bit. We'll call an end to that. Now, as we look at interest rates, we can clearly see that there's a lot of two-way action going on here. But for the most part, we're at 339 and a 10. That's up about 4 basis points. And we were at 329, down 7. So you can see there's been a big reversal. And the panel, of course, is going to discuss this. The thing that really bothers me with regard to inflation is everybody here on this panel agreed months ago that one of the reasons inflation was high was all the government spending. And after we agreed on that, what did the government do? They spent more. Student loans, welfare in terms of the CHIPS Act. Seems like nothing is sinking in. These numbers aren't better than expected, and maybe they should be, and maybe ultimately they're going to start to go back up again because we continue to go back to that well of debt and spending. The gang, back to you.
Yeah,
all right,
we've had
Carlos, let's get rid of that.
On and
we get rid of the volume as well. Sweet. All right, let me remove that. Boom. Okay, excellent. So we heard the numbers. Now let's just break them down and break them down extremely slowly, okay? The estimate was at 8%, okay? So he said we came in at the estimate I think was 8.1. We came in at 8.2. A lot of people thought we were coming 7.9 all the way up to 8.3. But each of the numbers were hot. We knew that gasoline was coming down. So everybody expected the month over month to drop 1%. I mean, 0.1 where it went up 0.1. So that's actually a huge change. So it's no wonder that the market sold off. Now, I told you what would happen right before the numbers came out. You'd see a pop to 300 on the Dow, then probably back to 100, and then the numbers would come out and we'd see how the market was going to react. So you saw the market's initial reaction. So here's where we have to talk about the psychology of trading, because I'm going to share a key point, what's going on over the past 1 week of the market. JP Morgan came out this morning and they said they pulled all of their investors together, and from all the positions going short, 2% people lightened up. So meaning wherever the short position was, whatever percentage was, it became 2% narrower, meaning the short positions were bought back. Now you look at the long positions, it came in at 4.4, which means more investors that were sitting on the sidelines have been going into the market. Okay, so they've been putting inflow into the market, thus pushing it up. Now, volume hasn't been as crazy as I thought we'd see this week. So let me talk about the SPY real quick and what we could potentially see, okay? Now, you have to think about, again, the psychology. are all these people that have been buying the market for the past week. When Jim Cramer called the low and said, we're never going to retouch the June lows, and then called the low last week after we dropped, we hit 388. Now, understand, we went up 5% from 388 Tuesday morning. 5%. We're all the way up at like 414 pre-market prior to this. So there could be some consolidation. Now, if the numbers came in light, you would see the market shoot up. We'd probably be talking about a 1,000-point day on the Dow. It would start at 3. By the market open, it would have been 5, and ending at 1,000 points, maybe even 1,200. Again, if the numbers came in cool, but they were on fire. So let's talk about what could potentially happen, okay? We've got the on fire numbers today that everybody will have to process. So you saw the initial reaction where the market dropped. Now, there are people that haven't got to work yet. They're in the cars. We're talking about hedge fund managers. Everybody thinks, oh, they're there early. No, they're watching this at their house. They generally come to the office probably right before 9:30. They're not talking to anybody because they're watching the market open and they're letting their traders do their business, probably have a morning meeting sometime around 11 a.m. Remember, most of the trading happens between 9:30 and 10:30 and 3:30 and 4. So these hedge funds, everybody's just waiting on the sidelines. They already know their plan of attack. So me, if I were still working for the hedge funds, which I used to, I worked for D.E. Shaw back when I was graduating high school. All right, so that's taking us back a number of years. But understand, I would be coming up with my plan. All right, let's unload. Let's unload at the right time. I wouldn't be surprised if we see a little bit of a market pump because, again, most of the traders on the sidelines are saying, okay, well, let's see. So you're a hedge fund. You want to sell a position. If you sell it at market open, what it's going to happen? Position is going to get even worse. If you sell more of it, it gets even worse, even worse. Your exit price is going to be terrible. So what would you like to see? And this is why we see a quick change of pattern every morning, or most mornings, I'll say. So you see the market open some mornings and it goes down, and then immediately within 30 minutes, it gets bought up. Because if you're going bullish on the market, you don't want to buy it open. You buy it open, you're showing people your hand. You're showing people the strength. So they're saying, oh, they're buying it open. It's just going to go up, 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 up. And our market stocks only just go up, which is not true. So don't be surprised at open if we see a bit of a pump. And this might be a little bit of a longer pump. I could see them trying to pump it and saying, no, hold the line. Don't sell off yet. Don't sell off yet. And then they sell off. And when I say pump, if we start off down 400 and it goes from down 400 to down 100, that's a pump. I'm not saying we're going green, we're going plus 300 or 400. I'm just saying, be aware. And I shot a TikTok video yesterday. I try and make those funny and entertaining for you guys, but I shot a TikTok video explaining what a pump and dump is, explaining how there's manipulation in the market. So let me just see where we are pre-market, because I pulled that off the screen so that you guys could hear me. Oh, and we're going to get to some questions. So please, if you have questions, ask. Okay, the SPY is down 1.5. Okay, now here's the catch. This is great news. Well, it's not great news for me. I didn't carry any positions overnight, but we all know I've been bearish. Now, here's the point of inflection. The SPY is at $404.50 pre-market, okay? Now, let's talk about the last few CPIs. The market, or the SPY specifically, has moved 1.5%. Well, right now, being down 6 points, it's down 1.60%. So that is the average move. So you say, okay, well, if the move is already baked into the market, how can I play the numbers today? So let me tell you what I'm going to do, because being on YouTube, I'm not one of those guys that says, buy this, sell this. This is going higher. I put my money in. I'm going to share what my trading strategy is today so that if you guys can use your own strategy and process and go forward. Now, again, we had CPI today, which came in hot, okay? We have quad witching on Friday. So for my option plays, if I'm going to invest in a stock and I'm going to be a bear in the stock and say it's going to give back everything that it just made in the past week, and we're going to revisit 388 on the SPY by next Friday, okay? I'm going to buy out extra time. Now, why do I say 388? Because that's where we touched, and that's where everybody was buying, and we've seen that twice. So I don't say we're hitting that this week. Again, I told you what could be happening today. They could do tricky shit in the market. They could spike it open to sell off, to do this, to do that. But what I'm looking to do is any spikes that I see, I'm going to be buying puts for whatever stocks I'm looking at. Now, I could speak about a specific stock that I've been playing lately, you know what, we'll stay away from DraftKings, but I've been crushing DraftKings. When it was 18, I said it was going to 16. When it was 15.77, I said it had a chance to go back to 17.5 last week. It did. Those options returned like 400 and change. I only secured 133% because I like to bitch and complain about how I sold my position too soon. So that is an apology to everybody. It's coming. I am sorry for those people on my platform that hear me say something like, oh man, I wish I held that position longer. It's up 400%. And then I'll come on 15 minutes later. I'll be like 700% now. Look at that. I apologize for bitching at you. It's not going to happen anymore. If I can't hold the position, I'm going to take profit and be happy with it. If I hold the position, I might brag and say, this is the kind of position that I used to quick sell, secure profit, but I understand the direction of the market. So this is a perfect example. With CPI hot, it might make institutions rethink things. Now, institutions already, I've seen people that think the SPY is going to finish around 385 end of year. I've seen 450 end of year. So there's a big diversion there between the low end and the high end. Now, I think the market's going down. I think we are going into recession. And if we're not going to recession because job markets remain strong. Now, again, job numbers tomorrow morning at 8:30, pay specific attention. So the market could waver today. Let's say jobs come in weaker, okay? The market could go down saying, okay, signs of recession coming, okay? That's one way to look at it. So you could say tough Tuesday, tough Wednesday, Friday is quad witching, tough Friday. So now you say possibility 3 out of the next 4 days are down. But why is Matt still going to go out an extra week to buy his options? Well, easy. I don't want to put a limit. I don't want to stress myself out. My bad trades occur when I do not give myself enough time to be correct. Rule number 1, don't sell at a loss. What did I do yesterday on the SPY? I was like, oh my God, I'm going to be wrong. And it was only like 4 contracts and it was $100 because I traded lightly going into CPI. I'm not going to, do anything like that. Okay, let's see what else is going on. Okay, let's speak about the support and rejection levels. So I was mentioning the SPY was down 1.5 to 1.6%. Okay, on average, that has been the movement the last 3 or 4 CPIs. 1.5, it's been to the upside, okay? Today, we're seeing pre-market to the downside. But understand, here's where support could be. Now, $404.50 on the SPY. So currently, it's off 1.66% at 404.09. So it would not surprise me if it bounces up to 404.50 or 405 before it rejects. So I'm going to look, again, my own position, and I'm not going to over leverage. You know how many contracts I'm going to buy to start the day? Because I said I wasn't going to trade before 10:30. One contract, and I'm going to go out till next week. I might put in like, I don't know, $300, $350. Yes, I think I'm going to be right. And if the market drops, I will complain, but I won't complain because I already promised I'm not going to complain. The whole idea about trading is to increase your financial future, right? So if I go too hard, too fast, and I'm incorrect, and for some reason they keep buying the market up, maybe even to a flat level before it drops, I'm going to be all in. And if I'm wrong about jobs tomorrow, so mentioning jobs, let's go in. So jobs coming weaker tomorrow, okay? Let's give an example. People say, okay, recession's coming. Things go down. I already mentioned corporate borrowing is going to go up. Interest rates are going up. So if interest rates go up, it's going to be more expensive for corporations to borrow. So check out, if you like Apple, Google, Tesla, check on their debt. If they have a lot of debt, it's going to be more expensive. If you're invested in a company that has no debt, then higher interest rates should not affect that. All right, so again, levels of the SPY, 404.50 is a teetering point. If we drop below 404.50, expect we're going to see 400. Now, my pre-market prediction, going back yesterday, I said bad CPI numbers, 400 on the downside. Good CPI numbers, 419 on the high side. So there's a 19-point swing between what could have happened in the market today based on the numbers. So yes, I think 400 on the downside. Then you ask yourself, all right, we were at 414 pre-market. We're sitting at 404 now, okay? Even if there is a bit of a pump, what is the market telling you? The market is telling you that it wants to go down. So if you see that, and then you see tough job numbers tomorrow, and the market goes down, and it cracks the 400 level to the downside, you ask yourself, wow, which direction is the market heading in? Don't fight the trend. So let's talk about support and resistance again. You had 415, which I didn't get to mention because if CPI was cool or down this morning, 415 was a supply zone, meaning if it hit that zone, a lot of institutions are selling their shares of the ETF. But it didn't because CPI was hot. So you broke to 410, 409, shot way past that, broke down to 404, and it's really a 404, 405 level. So I say 404.50. But again, if it breaks below that, you're looking at slightly over 400. In fact, they might let it drop right to 400, 399.99, something to that extent. That should be support. It could be support for today, just like the 404.50 is. But if it breaks down, understand what you're looking at next. And I mention that because if you're in puts and you think the market's going to get uglier, you say, okay, 404, okay, it broke past there. The next number I'm looking for is 400. So it'll trade between 400 and 404. But you don't have to sell because you're riding the right direction. That's the whole point about being correct when you make a trade. So again, I'm going to go out a week on my trade. I'm going to be playing SPY puts. I'm not going to enter at open. I'm going to see what the market does. Hopefully they buy it up quickly. Right now it's 404 flat down 1.68. I don't want that. I would like to get in at half that. So I'd like to get in, say it spikes to 406, 407, 408, even 409, okay? Because 409 will act as resistance today. There's no doubt in my mind. So I'm looking to call the best entry. And that's been my problem lately. I have FOMO. I already know what I want to do. And I'm so eager to get into the trade that I trade too soon and I pay too much for that option. Because remember, as time decays, so let's say the SPY just goes flat the entire day. The option that I might spend $360 in the morning buying it, let's say just the SPY goes flat the whole day, it would probably be down 20% end of the day with no trading just because I lost that one full day. All right, with that said, I'm wishing everybody a great morning, and I'll talk to you guys later. Find you on Discord. That's where we're heading right now.